you can look out a month at a time. The overall picture is it's going to be basically inflationary, recessionary. And so you want to own commodities that people absolutely need, and you want to be shedding service industries that are not necessary because people are going to be swapping out of that to pay for a higher cost of living. And it's not any more complicated than that.
And good afternoon, everyone. An Adapt 2030 favorite back to tell us what the calls are for the month. What do you think is going to happen this month? I mean, we might call this beware the Ides of March. So many things are happening right now. You can see the world getting twisted upside down. What Bitcoin halvings back on the radar, just a huge amount of traffic. This is straight up in the Google searches again. A lot of people are interested in that. We'll talk about it. The Fed stopping the emergency bank lending program March 11th. So what's going to happen? What's going to go bump in the night should be a better question with that. And then there's more Red Sea contagion. I mean, just these ships are getting hit left, right, and center. And what are we going to talk about with that? So, Bob, I appreciate you joining me again to fill us in with some trading wisdom. And remember, everybody, if you want to go to tradewith2030.com, take a look at the attaboys there and get some moves for March. Welcome, Bob.
Hey, Dave, thanks for having me. Yeah, March is a really interesting month. So, we hit record highs on the market, probably on the back of Nvidia and SMCI, the AI bubble craze, and that's really petering out. SMCI already had a crash down 25%. It's climbed back up to try to hit that new high again, failed, and so we expect Nvidia probably will do the same. And before anybody just says, "Hey, it's a brand new world," the valuations on Nvidia and the AI ilk is higher. Price of sales, price to earnings, percent of GDP, blah blah blah, than even the great tech bubble in 2000. So we think that'll fail. That's going to cause the market some grief, and we're going from the Mag 7 basically to the Mag 1 with Nvidia. So we're looking for some weakness in the broad market into into March. And also on Bitcoin's interesting. Bitcoin halving is coming up. Halving years for Bitcoin, March is not a good month for Bitcoin, probabilistically. So, we're looking. Although today I think we're getting a little bit of a pop in Bitcoin. The Bitcoin miners are popping too. We're just nervous right now. We'd like to see a bit of a flush in Bitcoin and get on the other side of the halving and then look for opportunities to buy. Bitcoin is tracking the S&P 500 pretty closely here. So we think it's a liquidity play, and if liquidity leaves the big market, it's going to cause grief for Bitcoin in the short term, as well as gold and silver will suffer then too. However, in March, energy. March, April is a big month for natural gas. We're already starting to see some moves there. And basically from the end of February to the middle of May is big moves for oil. And we've been trading in that space very, very effectively, Dave. So, if people buy the service from us through you, what they pay for the service, probably the trades that we put on. I sent you two attaboys this morning after I sent you attaboys from last week of trades we're hitting just today. So, and we don't day trade, guys, so you don't have to worry about having a big account. We swing trade, and we have a really good track record. But check out the attaboys on that. We think the energy play is going to be big, and the government is in a position now where they're going to let inflation fly. And so you're going to see the 10-year yield go up. Energy likes when the 10-year yield goes up. Natural gas has been, they're starting to close wells in the natural gas area, which means prices will go higher in that. And all that means is opportunity for us. And the last thing you mentioned was shippers is because they're charging so much more now to ship, and some of the areas are basically uninsurable. It means longer routes. They make more money. And so you have opportunity in shippers. So we're in a number of shipping names. We just closed one today for a nice profit. Okay, we're in about two or three other ones. and the yields that these guys pay out is enormous. So that's kind of it in a thumbnail, Dave. So if people want to make money on the long side, energy is the game, or you want to buy long rates, meaning you buy TBT. And if you're on the short side, is I think the tech is starting to suffer. Check out small cap tech. It never reached a new high. So big divergence there. All the gains have been in the big names, and they're starting to falter now.
So let me ask kind of a newbie question then. If they're reaching lower highs for that entire sector there, then what's that kind of indicating? That it's peaked, it's not coming back, and each high is again going to be lower than the last, and it's going to have that step down to it? Is something like that?
Yeah, usually we look for is we like to see a big break on a downside, and then for it to try to recover and fail, and then I think we get that walking down pattern like we did a la 2001, 2002. And ironically, that's when uranium and energy stocks had nice moves into 2005 and 2006. So you just see a big shift out of tech and into energy. And look, the government only has two choices, right? They rather boil the frog, right, than basically throw everybody off out of a 7-story window, okay? Because they can blame other things if it's slow motion, but if it's if we get a deflationary crack because of a mistake from policymakers, everybody notices that. Inflation is insidious, and they just slowly punish people, and they can point in all kinds of directions and blame everybody else because you're being grinded to death at 0.5% and 1% a month versus taking a 30 or 40% deflationary jack. And they do that to protect the banks, right? Banks love inflation, they hate deflation.
Keep your frog out of my pot. Of time to make some money, so we don't have to worry about that inflation. But I got some information here. Traveling in Asia right now. I'm in Taiwan, and talking to somebody down in Hong Kong. They said the rates to Europe from Hong Kong have double the rate right now because to get over to Europe on the routes that are going over there. So I can verify that even over here, out of Asia, everything's getting so much more expensive. And again, you think companies are going to absorb that? Of course not. They're just going to pass it on to you. They're going to pass it on the sales price. So what is that? And how would you interpret that in terms of percentages? So if the shipping is going to double, Bob, so this is like a math question, then maybe you can answer. If the shipping rates double, they're going to pass it on to the customer. So how much extra revenue per year could that be anticipated for a company that has XYZ product for sale? I'm just looking for a percentage on that. How much might that boost some valuations?
I was executive for 2 Fortune 500 companies, and the biggest question we always had in our strategy meetings is that pricing's hard. We had a CEO that came from the defense industry. He said, "Well, just do cost plus." Well, that's nice, except that you have sensitivity to price, right? You have what's called demand elasticity, and depending on how high you raise the price, people will just look for alternatives, or they'll just refuse to purchase. And so you can raise your prices all you want, but if you don't get the units, is what we're seeing here. It's called demand destruction. So instead of worrying about that, you just buy the shippers. And so we had this in COVID when the shipping rates went up, and these guys went up 4 or 5x. So we're expecting some strength in these shipping names, especially ones that ship fuel products. So you look at companies like LPG. You look at TRMD, you look at FLNG. Those guys ship liquid propane, liquid natural gas, oil. All those guys are getting really good rates, and some of the dry bulk shippers too. We just got out of one called Castor Maritime. So the two trades that we profited from today were two shipping companies. 10% on one of them in 3 days, and 3% on another one in week and a half. So these are good trades. And you have to remember, if you're making 3% every week or so, that's 150% a year. So, people sneeze at these things, but, you just grind your way to profit. You don't get greedy. And so if you can make, 1.5% a week, you're making 70% a year in the markets. So those base hits pay. And shipping right now is in base hit area. And we're going to be shifting over to the natural gas drillers and the natural gas extractors here coming into March and April. And then we're just going to have to see and wait to see what the Fed, if they panic going into May or June, because they're not going to lower rates in March, Dave. And you want to talk about the program of protecting the banks that dries up. That's going to cause rates to lift, and it's going to cause the banks to even more stress. And then, 25, 26, those years, commercial real estate is going to put the banks out of business. Excuse me. That's my monologue, and I'm losing my voice.
Well, that's all right. Cause yeah, you sent me those two attaboys and somebody hit on those, the prices that you were telling them to get out. And like, yeah, thanks for giving me the tip on that because, what you get that magic number that you'd anticipated there, follow the moves. And again, trade with 2030.com, go over there, see, how you can join Bob and then get those tips, what they're talking to the crowd inside there that's with them. Now, it seems like this shipping and the energy kind of like DNA strands moving along. It seems like there's so much intertwining between those two that you're on right now. And what's this thing with March and April? Why is natural gas such a big thing then, you think? Because you're really focused on that. So for me, I'm not thinking the winter's over. It's not going to be using as much natural gas, but I mean, you're seeing something completely different than my eyes aren't seeing.
Yeah, so it's counterintuitive. So usually it's March and April is when they refill the storage tanks for summer. So they've been draining out the tanks all winter for the winter demand. And so they're not buying as much natural gas, so prices fall during that period of time. And then you get the storage is getting low. They have to inject back into these natural gas storage systems. And so they start buying it and prices go up in anticipation of that. So that's why you have these seasons like that. Same with oil right now. Oil's being bought for summer driving, and so it pushes all the way up into May. Then June, July, August falls. Then there's another season in October, November for oil, and like I said, natural gas has its season in the springtime. I have to look to see when the fall one is, but the spring one's the big one. Get ready for summer cooling, and so that's what it is. So people always get confused. Oh, it's cold. They better buy natural gas. That's not how it works. If there's gas in the storage, they rather draw it out than pay a premium. But it gets to a point where storage gets too low, they have to inject into the storage systems, and prices go up. And we're there now. It hit a low of 157 or 147. I have to check my notes, and then it just popped. And so we're at a point now where the people that are buying natural gas feel it's at a low, and they're starting to buy futures to protect their purchases into the spring. So it's going to be a good spring for natural gas. And then you hop off that trade, and then we get to take a look at what's going to happen in April and May. So you don't have to overthink the macro here. You can look out a month at a time. The overall picture is it's going to be basically inflationary, recessionary. And so you want to own commodities that people absolutely need, and you want to be shedding service industries that are not necessary, because people are going to be swapping out of that to pay for a higher cost of living. And it's not any more complicated than that.
That's the thing about cyclic. It doesn't matter if it was the 2000 and the dot-com crash or where we come here and there's a possible another tech crash coming. Yeah, sure, the tech's different from the year 2000 or 1999 until it is today. We got different devices, different gizmos, et cetera. But you know what? One thing that stays the same is that energy keeps getting used again and again. That's one thing that never changes. It seems that 150 years ago, they're still using energy, but what was the tech at the time? So it just seems that there's something stayed the same.
Yeah, we're looking here is also CCJ pushed down in uranium. So look for an opportunity there in March as well. And and I'm looking at the charts here while we're talking. And Bitcoin here, big, massive move here since this morning's open, Dave. We moved from 51 and change to 451 right now. So Bitcoin's moving, but also the Bitcoin miners, we trade them. We have algorithms that you can have access to as part of the service. That's the other thing too. We just not only give you trades, we also give you access to our toolkit that you can then find your own trades. But Bitcoin miners are moving, and then we trade BITI and BITO. So both of those are available to trade for people who want to get into crypto but are afraid to get a crypto account. You could just trade those through there's blockchain ETF. There's BITI, BITO for futures contracts. There's also Mara and Riot, CleanSpark and Wolf. I got a big position in CleanSpark right now. Bitcoin does. Our view on Bitcoin is before we get any kind of really big pushback after March, is we think we can hit 107, 110,000 on Bitcoin. Then you're looking at Mara in the 90s, that kind of stuff. So, but we're still looking for a pushback down before we get the really big move with the halving. So, but we don't really care.
Just a nugget for everybody. You're talking about the push down. Everybody's anticipating. So what number would you be looking for to hit the push down? Maybe you don't want to share the secret sauce.
Yeah, 10% maybe, 12%. Yeah, but here we don't really care though. So you and I are just talking macro. If our algorithm says to buy, we just simply buy.
And what about the ETFs coming in this time too? Like that wasn't, during those past halvings in 2012, 16, and 2020. ETFs weren't a thing. Like those Bitcoin ETFs weren't even, they were off the radar, but now they're front and center, and, big institutional money is looking at this thing in a different way than it did prior. So you think that'll have any effect on it this time? And then again, driving the miners also.
Yeah, it's unknowable. Obviously it's had a good effect so far. People front ran the ETFs being put out there. So that's why we think we can get a double on Bitcoin here. We get any kind of really meaningful bear market, if you will, after the halving. But we don't know if we're going to get a push down first in the March, because liquidity is going to dry up on the stock side, or if everybody's just going to bail out of the stock market and bail into Bitcoin. So it's going to be an interesting thing to watch. Right now, it's tough to short Bitcoin because you're getting these kind of crazy moves. But they do these kind of moves too to blow stops out before they bring it down. So we're just gonna have to wait and see what happens. But right now it has a buy signal on, so you have to be long. So I'm talking about in March, probabilistically, it says Bitcoin suffers in halving years. So we're just gonna have to wait and see.
Oh, suffering Bitcoin. Oh, terrible. Well, Bob, I appreciate your time here. And also, that's great that you got the toolkit and you can put on some trades. And, the toolkit's interesting because, allowing you to try to make your own moves or even look for opportunities out there that maybe are not on the radar for everybody, that are, out in the ether. Maybe, you live somewhere where you start to hear about a company that's local. I mean, the toolkit to be able to allow you to make trades, that's awesome,
Why don't we do next month? I'll just share my screen and show people how it works.
Yeah, great. And please remember, tradewell2030.com. Jump on over there and, get the wisdom from Bob. Check out the track record, the attaboys, and those who are already making money.
Yeah, Dave, thanks for having me, and we'll see you guys next month.
Okay, bye for now.